As I mentioned, the Naira looking relatively stable. It's below 160. On the equity front, though, a bit of a disappointment today, down around 2%. Is there a lot of activity that's actually pushing the market at this stage?
Well, on the equities front, we've seen a bit of weakness coming in. Well, I think for now the equities, the index is still holding above the key 20,000 mark. We don't think we don't want to see it below those levels, but we tend to see more of the shift from equities into the fixed income space. So far, that's what the shift it's tending towards. But overall, it's been a pretty much flat to negative bias for most of the trading sessions so far on the equities front.
Nwabueze, I mean, you mentioned something interesting. It has been an interesting trend to look at, the fact that we're seeing a shift from equities into the fixed income space. Are we just looking at very attractive yields right now that is luring in the investor?
Yeah, I mean, looking at the fixed income space, you tend to see the yields are quite attractive, we might say that, and it obviously poses good returns for the investors, and comparable with the fact that you're looking at most of the government security, sovereign risks, you're taking at those levels. I think overall a discerning investor might want to put in some portfolio reallocation, and while awaiting to see how much of growth and how much of prospect the economy has in going into the future. I think albeit it might be a temporary shift, but for now that space looks like a very attractive market to go to.
Okay, so the Naira has also been strengthening. We've actually seen quite a bit of demand coming through from NNPC and various other oil firms and even banks that came through. We've seen the Naira closing at around 158.4. That's on the interbank markets. Tell us about the parallel market that we actually see and whether the numbers are synonymous, because we knew that that was actually slightly higher than what we see in the interbank market.
Oh yeah, generally there have been a very good convergence of the rates across the three markets, CBN window, the interbank market, and the parallel market. We've seen that convergence. We wouldn't remove the fact that the truth is, once you see such convergence happening in the interbank and the CBN market, it just gives a bit of, the parallel market might have a bit of lag, but definitely you see such convergence happening. I've actually seen it. I think the parallel market is trading around the 160, 161 levels from the previous high of about 163 levels. And you're seeing the interbank market, albeit for the past three trading sections, for the past 3 days, we've seen the Naira actually moved again half a percentage point against the dollar. We're seeing impressive stability and appreciation from the CBN window front also. I think overall it looks, we should all be smiling.
Okay, well, why we should also be smiling is the fact that we've actually seen external reserves rising since the beginning of this year. In fact, towards the end of last year, we actually saw this coming to the fore, and many are now speculating that this is the partial removal of the fuel subsidy. We also know that there's been quite a lot of concern about fraudulent payments coming to the fore. Do you think that this is the case, that we've actually seen quite a nice spike into the reserve number, reaching around $35.04 billion US?
Yeah, I think at this point we do acknowledge what the CBN has done over the past, from the last quarter even until now. We've seen them introduce a couple of reforms, a couple of ideas, a couple of initiatives in the FX market, all in the bid to actually reduce speculative activities. And was note that the central bank, the last MPC actually mentioned that they were able to reduce to a certain level the speculative activities in the interbank market, and we've seen more of that coming into fore. Overall, we think, yes, you might see a bit of slowdown in demand from the oil sector as regards the fuel subsidy and the whole borough surrounding it for now. You'll see external reserve levels actually inciting certain form of confidence. The normal trend where you have that the people, the importers or the end users of the fund actually bring forward their bids, all in the bid to get foreign currencies at the attractive level, current attractive level, not knowing what to be in the next few months. That seems to have died down a bit. I think the CBN has done a very good job in smoothing out the prices on the currency, and that we've seen the benefits all around the markets, the interbank, the parallel, and also the CBN window.
Absolutely. So Nwabueze, let's just give us a little bit more color on the fact that the CBN is basically, as you alluded to, selling less FX at the wholesale Dutch auctions in favor of more interbank sales. This is obviously also going to have a bit of an impact in the way that the Naira is going to be performing going forward. If you could just give us a little bit more detail on the intricacies of these auctions.
Well, overall, we've seen the central bank actually start the intervention in the interbank market towards the last quarter of 2011. Actually, basically, what they tried to do was to smoothen out the disparity in the rates. We've seen a lot of more work done this year, albeit indirectly. We've seen the major oil companies coming into the market. Fortunately or unfortunately, we've not seen CBN intervention in the interbank market for this year, but you've actually seen the rates converge. So the overall strategy of ensuring that liquidity comes into the market, either through direct intervention or either through the sales by the major oil marketers, it's actually worked. It has put market on an ample space for most of like 2 months running now. And you know, when I think through the strategies and how it has evolved, I mean, sometimes we might have wanted to adopt a wait and see approach.
Yeah.
But overall, we must actually say yes, the approach worked very well.
Fantastic. Nwabueze, we have to leave it there. Thank you so much for joining us.